Barloworld's first half earnings jumped 70%, driven by demand from the mining industry. Revenue rose 19% to 28.1 billion rand, and the company hiked its interim dividend by 60% to 80 cents per share. Godfrey Matizwe spoke to Clive Thomson, CEO of Barloworld, for more.
Ours is a cyclical business, so 2008 was the last peak in the cycle when we produced good numbers. It came off through the financial crisis, and we've seen a recovery in the mining sector very strongly. And so, yes, it was very pleasing to be able to report strong numbers in this half.
This is the best numbers that you've reported since you became CEO?
Yes, I would think in percentage terms, it's in terms of percentage growth, it's the strongest half we've seen since I've been the CEO.
Yeah, so let's talk about the drivers for this set of numbers, particularly given the global context that we have. We know globally things are quite a lot of uncertain because of the Eurozone crisis. At the same time, we also have demand slowing down out of China, and yet you come up with numbers like this. Where did you find the money?
Yes, look, it essentially was driven by very strong levels of mining demand in our equipment business in Southern Africa and in Russia. And that's what drove it. Some big projects in Mozambique, on the Zambian copper belts, in Botswana, and some strong activity levels in Russia as well. Remember, we also are a lagging indicator, so should Chinese growth continue to slow and mining capex slow into the future, it will have a knock-on effect for us. But at the moment, our order books remain at record levels, and therefore the next 6 months still looks pretty good for us.
Yeah, so which commodities in particular are you seeing demand for equipment from?
You know, one of the strengths we have is we have diversity in commodity exposure. Coal is probably the biggest, and we've got some very large projects in northern Mozambique, in Tet, with Vale and Rio Tinto. So that's probably the single biggest driver. But in Zambia, of course, it's copper. In Botswana, it's diamonds. In Namibia, it's uranium and zinc. And in South Africa, we've seen iron ore and coal. And in Russia, gold. So it's that diversity of commodity exposure that gives us some resilience through the cycle.
Yeah, but you're not talking about Angola. What's going on in Angola?
Angola, it's more of an infrastructure play, so we don't have a big exposure to mining activity there. Yeah. But with the oil price where it is, we've seen government coffers filling up with dollars, and that's led to some resurgence in the infrastructure projects, which has been good for us there.
Right, but you talk about South Africa, you mentioned South Africa in passing. That suggests to me that the kind of demand that you're seeing out of South Africa is perhaps not as stellar as the results that we're seeing coming out of places like Mozambique, untraditional places, if you like, for mining.
Yes, that is true. I mean, South Africa is still the biggest component of our overall revenues and profitability. So it's still the most important geography. Yeah. But in terms of percentage growth, we're seeing higher growth rates coming out of the likes of Mozambique, Zambia, Botswana.
Yeah. At the same time, we spoke about the Eurozone earlier. We do know that Europe is in trouble, and we're beginning to see that reflected in GDP numbers that we saw. Spain, in particular, where you are, Iberia, we are seeing a recession coming into play there. What kind of an impact is that having on your numbers? I do know that you reported a loss in this reporting period.
Yes, look, Europe at the moment is very difficult, and particularly in our sector. You know, Spain, the industry is down about 90% of the levels it was at the peak in 2007. Yeah. So our business still does well in the sense that we're gaining market share, we're outperforming the competitors in a low market, but that can't compensate for the fact that the industry is down 90% of peak levels. So unfortunately, the focus really remains on cost control and trying to reposition the business to make profits at much lower activity levels going forward.
You're not selling?
No, we're not selling. I think we're committed to Caterpillar as a brand, and we know that construction, like mining, is cyclical, and it will come back in time. But I think the next 2 to 3 years is still going to be relatively tough.
Okay, so let's talk about that outlook. You are forecasting that you're going to report a strong set of numbers. Now, for journalists like myself, we like to deal with numbers. So I was hoping that you'd say to me, it's double-digit Godfrey, or it's going to be near to the numbers that we saw in the first half. What are you looking at?
Well, I can't make a forecast for the full year, but I can tell you it's going to be very strong, and it's certainly going to be in double digits. We know with quite a high degree of certainty what our mining equipment deliveries are going to be in the back 6 months, because those are firm and committed customer orders. So I have high visibility on the next 6 months, and Southern Africa and Russia are going to be very strong. And our automotive and logistics business had a 35% profit growth in the first half on the back of only a 7.5% revenue growth. So that was really a strong performance, and I expect that to continue as well in the second 6 months.
How worried are you about China?
Look, China's growth has moderated, but to put it in perspective, it's still at 8.1%. So I think it's probably good in a way. It's slowed from overinflated levels in double-digit kind of levels.
Sure.
But I think it's still an economy that needs to industrialize. It's still got a high percentage of gross fixed capital formation to GDP, and I think therefore the underlying demand drivers for commodities will remain intact, albeit at slightly moderated levels.
Yeah. What about this record order book that you have for Southern Africa? Going forward, what sort of growth do you see here? Are you looking at some kind of moderation?
Look, I think growth will moderate going forward, but I think the back 6 months will still be very strong. 2013, as we see it today, will hold up at pretty high levels, and thereafter it's going to be a function of global commodity prices and global mining capex. But I think over the longer term, I'm still very bullish for overall commodity demand and therefore the underlying demand for our products.
So what's the pace for the growth of that order book?
I think we will still see, at this point in time it's at record levels. I think by September we should be able to maintain it more or less at these levels, which will mean we'll have a strong start into 2013.
And for the South African economy and the impact of your business, given all the uncertainties you're looking at, Europe is slowing down. Yes, China is also slowing down a little bit.
Yes, there's no doubt that the Eurozone has an impact on South Africa. We're growing at in the sort of early 3% kind of levels, which is not really enough for South Africa to create the kind of jobs and to see the kind of advancement in the economy and socio-economic factors. We really need growth in the 5 to 6% range. So while 3% might look good relative to what's happening in Europe, it doesn't look so good relative to what's happening in China and some of the other economies, quite honestly, in sub-Saharan Africa. So it's not all bad news, but it's not where we need to be.
Yeah. Finally, Clive, last question. I'm sure this is a question that you're going to be asked for during your presentations to shareholders. That 60% increase in the first half dividend, likely to be maintained in the second half and for the full year?
I think our full year dividend would likely more closely approximate our full year growth in headline earnings per share. So it's probably too early to say where it will end up, but I think it was a sign of confidence by the board at the interim stage to increase the dividend by 60%. It's a cash outflow for the group, notwithstanding the fact that we've got some big acquisitions looming, and I think it's a sign of confidence that the future of the company is good.